Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of the U.S. taxation rules for foreign income. As we start teetering closer and closer to tax filing season, we start getting lots of questions and inquiries about what needs to be on the tax return, what foreign income, who, what, when, why, how. Let's go through the basics. So for purposes of this short presentation, we're just dealing with U.S. persons and Form 1040, not Form 1040 NR. So when talking about 1040, generally it's U.S. persons that have to file, some dual status taxpayers. That's going to be, from an individual perspective, it's U.S. persons, which is U.S. citizens, legal permanent residents, foreign nationals who meet the substantial presence test unless they otherwise meet an exception. There's other reporting that needs to be done as well. For most people, they have foreign assets, investments, investment accounts, stock accounts, bank accounts, life insurance, pension, things like that. That's for other presentations we have in our boat. You can just go to that YouTube page and you should be able to find a whole bunch of presentations on that. Today, we're just going to focus specifically on the reporting of foreign income. Which does lead me to one important fact in that in the last month or so, the Financial Crimes Enforcement Network, FinCEN, has really been pushing about the reporting of cryptocurrency, which takes me to the first point, which is that if you have any income generated from cryptocurrency overseas, it is still required to be included on your U.S. tax return. So just keep that in mind as you're going forward. In fact, added to the first page of the 1040 is a question about any transactions you've had with virtual currency. This would include crypto, Bitcoin, and all that good stuff. So that's just something to keep in mind as you get going on your tax return for 2020. Now, the U.S. is a citizen-based taxation setup, and that doesn't mean it's only for citizens. It's all U.S. persons. But what it does mean is that the U.S. taxes you on your worldwide income. It doesn't matter if you reside in the U.S., you reside overseas. It doesn't matter if the income is sourced in the U.S. or sourced overseas. If you're a U.S. citizen, you live in Portugal, you're making all your money in Taiwan, well, all of that money is included on your U.S. tax return. Why? Because the U.S. follows a worldwide income model and you are a U.S. person. So what are some of the different types of income that you have to include on your tax return? Here are some common ones. You may have earned income. You may be employed overseas, for example, or you might have your own business overseas. You have to report that income on your U.S. tax return. Now, one thing to keep in mind is that even though you have to include the income, you may qualify for certain exclusions, limitations, exceptions, tax credits, but from a baseline perspective, the income needs to be on there. For earned income, you may qualify for the foreign earned income exclusion, Form 2555. You may qualify for a foreign tax credit, Form 1116, or a hybrid of both depending on how much income you earn and if you're in a low tax or high tax jurisdiction. All of your passive income is reportable on your U.S. tax return: dividends, capital gain distributions, interest, rental income from your property. All of this goes on your U.S. tax return. Now, it may be tax exempt in the foreign jurisdiction, and you may be able to make a treaty play to get the taxes exempt. There are various rules to keep in mind with foreign pension depending on the country you reside in. If there's a treaty, is normally where you get taxed. But again, it's still included on your U.S. tax return, but you claim the treaty, or you claim the article of the treaty somewhere in the tax return to let them know that's what's going on. So that to make sure your administrator in the U.S. doesn't just report it to the IRS and they're like, oh, hey, you have $50,000 of income. It's not reported anywhere. Rental income, even if you net a loss, it still goes on your tax return. One common misconception is that if you have rental income and at the end of the day, between mortgage interest, depreciation, HOA, management, cleaning, commissions, you're below profitability, so you net a loss, that you don't have to include it because I netted a loss. That's not how the IRS sees it. You have to go to Schedule E as an Everett. You include your income, you include all the deductions on there and the expenses so the IRS can see, oh, you have the income, but you also have the deductions. And like I said before, you can always consider treaty rules depending on country of residence if you want to be treated as a foreign resident. If you're only taxed in the U.S. because you meet the substantial presence test, you can consider closer connection in a Form 8840. Treaty uses Form 8833, although it is important to note that there are many exceptions to having to file a Form 8833. So it's crucial that if you're going to do it yourself, which many times you can, just hop onto the 8833 instructions and look through what's exempt from having to be included on the actual tax return. If this is the first time you're hearing about this, but your tax situation goes back multiple years, you may consider one of the voluntary disclosure programs. There's the Voluntary Disclosure Program, VDP. There used to be OVDP, which was for offshore or foreign. Now the VDP program is used for both domestic and international. You've got reasonable cause. You've got the different streamlined programs, streamlined domestic offshore procedures for U.S. residents, streamlined foreign offshore procedures for non-U.S. residents, reasonable cause, and delinquency, although the delinquent procedures have essentially morphed back into a plain old reasonable cause statement. If you're doing any one of these programs, you should, be cognizant of who you're hiring. It should be someone who's board certified with all the advanced degrees and credentials, yada yada, because international tax is hard. It's not something that you want to mess up. And always, always, always flat fee for both tax and legal. We have various articles on the website explaining the old bait and switch low fee up front, only to find out that you end up paying 5 times as much as you would have paid had you just gone with a flat fee setup. We have lots of free information on our main website, goldinglawyers.com. Again, my name is Sean Golding with Golding & Golding. If you want to, you can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Thank you for your time. Enjoy the rest of your day.